Right, good afternoon. I have the wonderful session that comes just after the coffee break when everyone's energy levels are high again because of the caffeine and the sugar. Welcome, and welcome to my fellow panelists. My name is Fifi Peters. I am a senior anchor at CNBC Africa, a Pan-African business news channel in Africa. It has been my home, rather, for the bulk of my journalism career, which spans over a decade now, but who is counting? You know better than I that Africa is a hotspot for innovation. The first CAT scan for the medical industry was invented on the continent. The first computerized ticketing system for events and entertainment comes from Africa. The city of Kimberley, which is in the Northern Cape of South Africa, was one of the first cities in the world to install electric streetlights. And more recently, we've seen wonderful innovation from the mobile payment system coming out of East Africa. So innovation has always been in our DNA. But you know better than I that we do need funding to truly achieve scale. While the international community has been quite helpful in that regard over the past 18 months of the pandemic, providing financial assistance at favorable rates, this funding is insufficient to truly plug the gap of our need. We need a whole lot more, and we need funding that is sustainable. And so today we talk about what needs to be done to strengthen and build strong homegrown capital markets. And we'll also look at the role that the UAE can play in that regard. Enough talking from me, let me introduce you to the panel, starting with the gentleman on the far right, Miguel Azevedo, who is the head of investment banking for the Middle East and Africa for Citi. Good afternoon. Paul Kavuma, Chief Executive Officer of private equity firm Capital Principal Partners of Kenya. Good afternoon, sir.
All right.
As well as McDonald, the head of client coverage, wholesale banking for Standard Group South Africa. Afternoon, Megan. But Miguel, let me begin with you in terms of the point of departure of building and strengthening our capital markets here on the continent. What should it be, in your view?
Very good. Good afternoon, everyone. Well, I actually believe the whole COVID situation is a bit of a blessing in disguise. We were not having a great run in terms of capital markets across Africa before. What this has accelerated in Africa is digitalization, generally speaking, and we have seen quite a few great stories emerging in the last 2 years of great companies that want and can go public. And for a country, for a continent to have a successful capital market, you need success stories. You need companies that have succeeded in coming to the market and have, share price has gone up. And we are now seeing really a new beginning for international offerings of African companies. Most likely tomorrow or the day after, there will be the largest IPO ever out of sub-Saharan Africa, outside South Africa, in the New York Stock Exchange. I think this is the kind of catalysts that we need also to have to develop the domestic capital markets. You need people to want to own shares, and the only way to get there is to get great transactions. In sort of more mature markets, this role was played by privatizations. In Africa, you don't have many privatizations. Everything is new, but you have great new stories. And so I actually believe we are about to see quite a successful few IPOs out of Africa this year.
All right, thank you. And Megan, perhaps if I come to you, given that you and Miguel operate in a similar space, the capital markets space, his view is that COVID-19 has been somewhat of a blessing for the scene. Is that your experience, and what would your point of departure be in strengthening the homegrown capital market on Africa?
Thanks, Fifi, and good afternoon, everybody. It's an honor to be speaking to you this afternoon. I think a little bit, as Miguel said, it's been a bit of a two-speed kind of development of capital markets in Africa. It's gone through phases pre-pandemic of seeing a lot of issuance in the debt capital markets, for example, from sovereigns, issuing euro bonds cross-border, reaching record levels, 2018, 2019. That was really the way that was being led by the sovereigns, and then you started to see some of the corporates coming to market. That kind of all hit a big pause in 2020 when you saw a number of the African governments retreating from the capital markets and instead going to the IMF and the World Bank for funding support. And that was for obvious reasons. Obviously, investor sentiment again retreated away from the perception of more risky capital markets in Africa and retreated to the developed economies. And that's always been one of the big challenges in Africa when it comes to cross-border financing. So you see that financing drying up very quickly when there's a risk aversion event, global financial crisis, COVID pandemic. You suddenly see a lot of the hard currency funding being withdrawn from Africa. And that's when local markets, as Miguel has said, really need to come to the fore. And we've seen development of local capital markets, South Africa very deep and liquid, Nigeria posting very strong growth last year, kind of starting to lead the way in terms of post-pandemic. Some challenges in Kenya recently with some potential defaults, but what we haven't seen is a sustained track record of development. There are one or two good years, and then there are either external or internal events which then slow the development again. And I think, as Miguel said, we need to find the consistent good story, not just one or two issuers who come to either the equity or the debt capital markets, but finding those repeat issuers, finding the continued issuance so that you don't have the sense of peaks and troughs,
Sure.
Which are very much dependent on extraneous events.
Sure. I think that most people are aware that in terms of most things, in fact, COVID-19 did put things to a standstill. Private equity, I do know that there were some challenges in terms of private equity deals that were done as a result. But as we are talking recovery at this stage, Paul, perhaps give us a bit of flavor of what the pandemic, in your view, in your eyes, has done to the PE space, but also, as we are talking recovery, what's your outlook looking like and the point of departure of developing the local investor base?
Okay, thanks, Fifi. Maybe just to pick up on one or two of the comments from Miguel and Megan. First of all, there have been some bright spots. There has been, certain sectors which really have been benefited from this cycle, whether it be healthcare, education, more the defensive sectors, technology, digitization, all those things are presenting new opportunities. But, maybe to pick up on Megan's point, which is that, when you had the fits and starts, we did have a pullback in terms of capital allocation to the private equity industry. We're probably at the lowest, I think we're probably at a quarter of the capital that was raised in 2020 compared to 5 years before for the private equity industry. So there has been a pullback in terms of investor deployment into the private equity industry. And when you look at the whole financial sector, it's still very dominated by commercial banks in funding. It's 65% of our funding is commercial banks. And then the regulators also pulled back in some of the sectors where the capital markets had been developing. So the bond market, the commercial paper market, all had pullbacks because of a few accidents, let's call it, in the market where we had some unfortunate events. So the private equity industry has had to also sort of think about what is the next step for us. We certainly are looking at Kenya as an example in the region in which I focus. We've spent a lot of time with the regulator for the pension fund industry, for example, where reforms can have a major catalytic impact on the mobilization of local capital for the private equity industry. That has to be a key innovation because you mitigate the currency risk. There's $12 billion of funds under management by our local pension funds. And so we have spent a lot of time trying to unlock and there has been movement. So the RBA is now pulling back out from having to approve every issuance of funding into a private equity fund. That has moved back, but we're still not quite there.
Right.
So innovation is going to come from regulatory reform. As the private equity industry, we're trying to think longer term, beyond the cycles, trying to think about evergreen funds and more specific sector funds or green funds and all that sort of thing, and really look to mobilize capital from our own markets as well.
Exactly. And to your point, Miguel, you were talking about the hot IPOs that we should be on the lookout for potentially tomorrow happening. I'll have my journalist hat on then, and hopefully we'll report on that story. But how do we get those hot IPOs that are going to New York and other developed markets? How do we see some of that hotness coming here on the continent?
Was that for Miguel?
For me.
For you, Miguel.
Yes. Selling an African story to global investors, it's not great what I'm going to say, but it's really our experience was easier in 2013, 14, 15 than it is now. And the reason is very simple, is the companies remain fantastic. That's what I call the micro premium of Africa. But there is a massive macro discount. And the macro discount is usually associated with not so great politics and policies, generally speaking. And in the last few years, in the main markets, we have seen massive devaluations, massive unavailability of FX. So investors got burned. So it is difficult to sell a story. Having said that, as I said before, I think we are now, we have quite a few great stories, most of them in the digital /tech/fintech space. And I think, I'm an optimist, so I actually believe this time we will have very successful offerings. We have all learned from that. These business models are now a bit more insulated from those external factors. And once we have that, I think capital will flow into the continent. And by having capital flowing into the continent, I'm very positive there will be a copycat effect and there will be more offerings. At the same time, and just one final word, I think COVID also gave us and gave investors a new perception. People thought that, with COVID, Africa was going to suffer like no one else. It's going to be defaults right and left. It's going to be a disaster. And it's actually not the case. Yes, people had to restructure, some countries had to restructure that. But let me give you one example, which is a country that I'm personally very close to, which is Angola. It's kind of a new kid on the block. And it was a new kid on the block just before COVID. Obviously, oil is very important. With COVID and oil coming down to $20, the interest rate of Angola went up to 25%. With interest rates at 25%, this is dollar interest rates, there's not much you can do about it, right? It's just waiting. Well, the country did quite well in terms of managing its macroeconomic, the FX reserves, strong break on imports. They have started exporting a few other things. And guess what? Now, 18 months later, they are at 7%, which is a very normal and actually very attractive rate for that kind of rating. And with 7%, they can do so many other things. So I'm very positive that investors have now realized that even through a global pandemic, the apocalypse didn't come our way. And countries have managed to get the right policies in place. And so I'm actually quite positive we're getting into a new phase.
But of course, Miguel, the oil price has gone from $20 to over 80. I know this because I've been counting the cents on my pockets and how much more it's costing me to get to work. And so, in as much as it wasn't doom and gloom for the continent, but there was quite a bit of difficulty for a lot of the small businesses that operate on the continent. In fact, the bulk of the economy here in terms of the SMEs. And therefore, as we are talking about strengthening the development of homegrown capital markets, how do we do so in such a way that is inclusive, in such a way that next time an economic shock does happen, we've got a lot more companies who are in the position to restructure their financial standing or even raise capital on the market? Megan, your off-take at making capital markets inclusive, what would the ingredients be?
Yeah, it's a great question, because what you have seen in many parts of Africa, it's only the companies right at the top. So the biggest companies are the ones that generally are able to access either equity and debt capital markets. And what's really important is that next layer, that layer of SMEs. And there are a number of things that can be done there. We were talking earlier with Paul, in the briefing. A lot of the rules and requirements from a stock exchange listing perspective or a capital markets listing perspective are really only able to be met by the biggest companies that are the most sophisticated. It's quite expensive. It's quite challenging for smaller companies to be able to meet the reporting, the governance, the disclosure, all of those ingredients that go into putting a prospectus together to attract international investors are incredibly difficult to comply with if you're a smaller company. Mm-hmm. And that's where we've got to try and look at alternative type investment markets. It has been tried, alternative markets with less regulatory requirements. Hasn't been that successful, I think, because the requirements are still quite stringent, and so it shuts out a lot of potential investors and a lot of potential issuers in the market. So an interesting trend that we are seeing, probably twofold, in terms of making capital markets more accessible. One is the use of digitization. So quite in its infancy, but there are a number of initiatives across Africa that I'm aware of where stock exchanges and perhaps not even recognized stock exchanges, but alternative investment exchanges are developing digital platforms where the barriers to entry, let's say, or the entry-level requirements to access that digital platform, which then gives you access to an investor community, are far less stringent than what one finds in the more traditional capital markets. Obviously, that is something that's probably going to make regulators' hairs stand on end, because they worry about the risk, as they should, of protecting the investor community. But there is an investor class out there that has the expertise to actually unpack the risk and understand it and allocate capital accordingly. So I think the very interesting development is how we're going to see some of these digital e-trading platforms encourage issuers into the market that perhaps are not eligible for the more traditional type of capital market activity.
Yeah. And I think we have seen it, a bit of it in South Africa, Megan. I think that the Johannesburg Stock Exchange has really been given a run for its money of late with the new entrance of alternative stock exchanges that have provided smaller companies and even some big companies the opportunity to have a different flavor, as it were. But we still have the big boys. Goodness, I believe I'm saying that as a female. I'm supposed to be gender neutral, but it is what it is. And the deep money that still is on the main stock exchanges. So perhaps, Paul, you can speak to us about the alternative platforms, but also what needs to be done by the incumbents to make it a lot easier for more companies to come to market.
Well, maybe Megan's given me lots of lead-ins, and that space just before the companies that are already going to meet all the standards that the listing rules require. There's most of our economies in Africa, the hotbed of activity is in the layer below that. That's where a lot of emerging businesses are growing and don't have necessarily all the systems, the governance, the audited accounts, all those other things that are pre-listing rules. But this is exactly where the alternative asset class, the diversification of sources of capital, is going to be the trigger, I think, for unleashing the value chain. The value chain has to start from the underbelly of the economy, and then as those businesses emerge and scale and become more sophisticated, those are going to be great fodder for the listed capital markets. So the role that the private equity industry can and is and should continue to should play a more dominant role in playing is preparing, giving these businesses more capacity to scale, to govern, to report, to transparency and all those other things, regulatory compliance, and that will, by virtue of what we do, that will provide more stock that can come to the capital markets. So I think from government perspective, I think there almost has to be a more strategic view of the entire capital markets and just say, what's the source? Where does it migrate towards, and what's the output that we're looking for? We're looking for world-class organizations that can cross borders, that can deliver products and services across the continent. If that's the aspiration, we have to start at the grassroots and build from there. So the capital markets has to take a more strategic view, and we'll see an acceleration of this, the capital markets in going forward.
All right, Miguel?
Yes, just adding one comment here. We are discussing capital markets. Naturally, we have in mind public capital markets. But in the last few years, what happened across the globe, and is now actually coming to this continent as well, is, let's call it the private capital markets. There's a wave of private money around the world, obviously liquidated by central banks, and we all know the story. But the reality is, if we think about, there's not that many companies across Africa that are listed and worth over $1 billion. Just this year, we have had quite a few private companies raising money in the private capital markets, call it that way, that are actually above $1 billion. So there is liquidity out there for the good stories. And actually, I would say that when we are doing an IPO of an African company, we are fatally faced with the following question/comment. Okay, if it is an African story, it needs to come at a discount. Okay, but why? Why a discount? I think I alluded to that. It's primarily the macro discount. The private markets, the private capital markets, actually, if anything, that discount is much smaller. So it's actually a very interesting source of capital that companies like, we have mentioned here today a few, Wave, Flutter Wave, Cheaper Cash in Uganda, Fori in Egypt, Mukuru in Southern Africa. All these companies are above $1 billion, and they have raised, well, Fori is public, but they have raised in the private market. So there's definitely room for hope, and it's very alive and kicking, this space.
I love the positivity that you keep on, fueling into this discussion. I certainly do. Just a message to the audience. Please feel free to engage with us with your thoughts if you happen to be in this space as well. I will be able to take it through any questions that you may have, and I think it would be nice to hear some of your viewpoints. But Megan, to your point about some of the innovations that we have seen in your space, you spoke about the digital innovations. Another innovating or emerging trend, of course, as everyone does know, is that around ESG investing, right? And so to what degree do you think that this emerging trend around ESG, the social and the impact instruments thereof, how could this fuel the development of the local debt and equity market a lot quicker?
Absolutely, and it actually is already. So it's continuing on the positive theme set by my fellow speakers. ESG has been a huge breath of fresh air and breathing life into capital markets in Africa in a post-pandemic world. So what we've seen is a proliferation of green bonds, we've seen social bonds, and we've actually even seen things like green infrastructure bonds. So you're seeing Acorn Holdings in Kenya, dual listing on the Nairobi and London Stock Exchange, doing a green infrastructure bond, so a construction company raising financing and ensuring that the funding is being used to construct buildings in a green, climate-friendly way. So that's a green infrastructure bond out of Kenya. There was another renewable energy bond, North-South Power, out of Nigeria, also tapping into this theme of combining innovation with capital markets and ESG. And I think it's a hugely exciting space to watch because it's giving this breathing new life, as I said, but it's also developing an alternative asset class which allows issuers to tap into a new set of investors. Because that's also been, I think, part of the challenge in Africa is that the Euro bonds, the private equity to an extent, have all tapped into the global pension funds, asset managers, but it's the same type of investor. And when they all decide to withdraw their money, they do so as a group, and you're left with very few. Whereas I think in the ESG space, you're finding this great combination of innovation, social purpose, commitment to climate change, but a whole new class of investors, some of the traditional ones, but also a new class of investors that are obviously very hungry for these types of assets because of the global trend towards supporting ESG initiatives. And I think that will bring a new class of investor to look at Africa because, let's face it, the opportunities abound in Africa for ESG type assets. Netcare, the hospital group in South Africa, just did a sustainable bond. The company I represent, Standard Bank, did a social bond where the proceeds will be deployed to affordable housing for women in particular. I mean, there are just so many iterations of this theme, and you're already seeing this coming through in the capital markets. And I think it's a great and positive trend for Africa because not only is it developing alternative investments and asset classes, it's bringing more issuance onto the stock exchanges, which is driving liquidity. Liquidity has always been a challenge as well for, and particularly international investors who need a lot of liquidity to trade in and out. And it's also attracting new investors to Africa. So I think it's a hugely positive trend, and you're going to see a lot more in the ESG space combined with capital markets innovation coming out of Africa in the next few years.
I think that's encouraging because in as much as you do say the opportunities are abundant here, we host some of the fastest growing economies in the world, but it's also some of the economies that are the hardest hit by climate change. So I'd even go further to say that it's even necessary for the ESG trend to push forward at an accelerated pace. But Miguel?
Yeah, a quick comment, which is a real anecdotal story. Very recently, 3 or 4 months ago, together with Standard Bank, we ran a transaction, a bond issuance for a Nigerian company called Seplat. It's an upstream oil and gas company. It's doing its journey from oil towards gas, power. Quite an interesting story. But if you are primarily an oil upstream company, there's not a lot that you can do on the E. And most of the times when we talk about ESG, we think about the E. But they can do a lot on the S and a lot on the G. And so what this company did was they went for a sustainability rating, which kind of measured all these initiatives. And it was very interesting. For me, it was the first time that when we were talking to investors said, well, okay, you're doing the sustainability rating. If you get, and now I'm using fake numbers, but it gives you a good idea. If the sustainability rating comes B, I am ready to invest $100 million at 8%. If your rating is lower, i.e. say C, I will only invest $50 million, and it is at 9%. So for me it was, and this was just a few months ago, it was a $650 million deal, but it clearly gives you an idea that there is a cost for not doing the right thing. Investors are pricing it now. And it's not only cost, it's availability. You may not even be able to get it done. So it's definitely new times there. And as Megan was saying, it's so important, but it's opening new opportunities.
Certainly, certainly. Before I move on to some of our concluding remarks, just regarding the UAE specifically and the relationship that the UAE and Africa can have in developing the homegrown market. Paul, is there anything that you'd like to add regarding the ESG theme and the role that you see private equity, even venture capital, playing in flocking more towards this sector for the development of our markets?
Yeah, no, there's actually quite a lot to say about this. The whole private equity industry in Africa has really been funded predominantly by the development finance institutions. So all the IFCs, CDC, and EIBs and others. And so from the genesis of the private equity industry, ESG was one of the things which was of paramount importance to the industry. And what has happened over the years is actually the standards, global standards for ESG management systems have been actually developed in Africa and have been learned, adopted, I would say, by more developed markets as well. So actually when a lot of the international players were looking for centers of excellence, they were coming to see the standards being adopted by us in Africa. The other thing that I would say is that in the last number of years, even those standards have begun to evolve beyond just ESG to impact, and being able to now measure the impact of an ESG or an ESG standard on the population, on the market, on gender, on incomes, on quality of life, and to actually now be able to not just to say we've done ESG, we're great, we've got a sustainability index of Y, but to say in this area 10,000 children have improved the quality of their education by 20% over the last 5 years, and we're monitoring it every year and reporting it.
Yeah.
So the disciplines have now begun to evolve to actually look to try to quantify what this ESG theme, which is actually quite developed in African private equity, going forward.
Yeah, and I imagine eventually even set further targets once the initial targets that are being monitored and measured are reached. But I'd like for us to step into gear 5 now, because we've got around 7 minutes left for this panel. And so fast questions and fast responses, but be audible. Miguel, the role of the UAE. Any lessons you think we can take as a continent from the UAE in terms of how to develop our own homegrown capital markets?
Yeah, what can I say? It's basically very important to have solid stories, solid companies, very solid governance. Yes, it is important to create a community of domestic investors. Obviously, that's easier said than done. In this particular region, there is such a community, and that has helped a lot. But I think what we are now seeing, and it's not exactly to your topic, but it's related, we are definitely seeing the UAE and some of the funds/holding companies from this country increasingly looking into Africa. And I think it's very different from what it was 3 or 4 years ago. So I'm actually very positive that the links between the two regions will increase significantly in the next few years.
Certainly. I think the opening session with the chairman of DP World, he uttered those words exactly to say that they were increasingly looking into the continent, and they are presently doing in talks to wrap up a nice deal in South Africa, but that's not the topic of discussion here. Paul, lessons from the UAE?
Yeah, no, I think, we've got from an Africa capital market perspective, I think we have a giant on our doorstep, which is UAE, and currently, my understanding is they're about number 20 in the rankings globally in terms of capital flowing into Africa from UAE. You would expect, given our proximity, given the linkages, given the fact that actually a lot of corporates are now beginning to look at Africa, we'd expect those floodgates to open much more widely. There's about $20 billion coming into the continent. You know, as the gateway for capital, we would expect this to become an overweight source of capital and expertise. You know, we're getting plenty of money coming from Asia, from Europe. I think the linkages here are more natural and could be, I think, exponentially grown in terms of the amount of capital and exchange of entry into each other's markets from UAE.
And it looks like the free trade area deal has helped somewhat in perhaps catalyzing those investments, and it will be interesting to see how much more is catalyzed as the trade deal really gets embedded. Megan, you are free to also comment on the UAE, but I wondered if perhaps you could also comment on a question that has come through from the audience, and thank you for your question. How would you help country like Senegal industrialize the peanut sector and help SMEs to penetrate the international markets?
Yeah, thanks. Thank you for the question. I mean, it speaks to a broader theme that I wanted to touch on, which is as Paul said, it's quite surprising when you see the opportunity, and we've all been speaking this panel and throughout the day, the opportunity that Africa represents in terms of growth. However, the reality of some of the capital flows isn't quite doing that potential justice. And to the question about Senegal, I think it's about selling your story. It's about education. I think a lot of people believe the headlines about Africa, which can usually tend to be quite negative, as opposed to when you actually go there and you understand it and you get to know it, the reality is often not nearly as challenging as some of the headlines. And there are, as Miguel said, some fantastic, phenomenal, positive stories coming out. But if you don't get out there and tell your story, tell it consistently, back it up with the evidence, then you're going to struggle. And a final point on perhaps the UAE sort of Africa connection, the other thing I would say is there is growth potential, enormous, in Africa, but it's not about going to make a quick buck or a quick return. I think sometimes that's where people go wrong, is that they think they can go into Africa, make a quick and a big return, and get out. It's not. It's a long-term partnership, I think, that's needed between the UAE and Africa to really get to know each other, to partner each other through the ups and the downs. And then the long-term returns will be there on a sustainable basis.
All right. Just 2 minutes in counting down. Perhaps final thoughts. I mean, Miguel, Paul, both of you mentioned the policy and the political considerations that, if addressed, could help attract a whole lot more capital. Any specific detail around the policy or the regulation, perhaps, that is a low-hanging fruit that can open up those floodgates a lot quicker? Miguel?
Yes. Stability of policies, transparency of policies, fact and science-based policies, and no room for unnecessary surprises and uncertainties.
Right, as in hidden debt that you find, when you weigh in too deep the relationship with the country. But nonetheless, Paul.
Yeah, I mean, I just wanted to make one more comment. Last comment on UAE is that I said that it's underweight, but actually I'm feeling like they're coming to the boxing weight is increasing. I think the appetite is increasing, and even the meetings I've had in the last couple of days here have demonstrated that. But the biggest change for us is going to be mobilizing the local capital to fuel the local domestic markets. When you do that, the international capital will flow. And there are some very specific things about unlocking the discretion that asset managers have in our markets, particularly in the larger capital markets like Kenya, to have discretion to be able to invest in the alternative asset class. That's the biggest game changer I think will come.
All right. Last but not least, we give it to you, Megan, to give us our parting shots for the discussion today on fueling innovation on the continent through strong capital markets.
I think the future looks bright. I mean, we are acknowledging there are challenges, but there's so many positive trends now emerging post-pandemic. I mean, I think it's wonderful to see the level of interest, just how many people are here interested in UAE Africa growth. I think that bodes exceptionally well. And I would say, form a true partnership. The rewards are there, but you need to put in the effort as well. But undoubtedly, the rewards are there. And the final point I would make is, try and also not look at it only in hard currency. We also want to encourage international investors to perhaps come and help support development of the local currency market, and things like swaps and hedging instruments are improving to help manage the currency risk. So it's an increasing sophistication and maturity of the capital markets in Africa, which I think makes it a very exciting place to be.
Indeed, indeed. And thank you so much for all of your insights. It's a wrap.
Thank you.
Thanks to you, the audience, as well. Could you just ask that everyone do stay seated? There's the last session that is about to come up, and we would appreciate your participation thereof. But thanks so much for listening.